Roger Altman joins us here at Post 9 this morning, Evercore founder, senior chairman, former deputy secretary of the Treasury. Roger, it's great to have you back. To Steve's point, do you think there is a turn away from U.S. assets in general?
Well, I think it's too soon to say definitely yes or definitely no. But as so many people have said, including Secretary Yellen, the intermarket movements that we saw over the past few days are very abnormal, and they're inherently alarming. Because, for example, in the most basic sense, when yields rise, at the margin, the dollar strengthens. Because, of course, you get paid more to hold it. And that's not what happened late last week in terms of the dollar Treasury, the ratio between the dollar and Treasury yields. Now, is that the beginning of a serious long-term movement away from U.S. assets? I don't think you can say that yet. But it's not something you want to see.
Right. The Times this morning fronts a piece saying it's shaken the faith in U.S. Treasuries, at least. You think that's fair?
Momentarily. I mean, I think you have to take a deep breath and say it would take a lot more for the world to decide, you know, we're moving away permanently from dollar-based assets and Treasuries in particular. I don't think you're at that point yet, but I don't think it's a good development.
What do you think specifically international investors are concerned about it? Is it the destabilization element of it? Is it just the lack of clarity?
Gigantic uncertainty. I mean, gigantic uncertainty. Tariffs are on. Tariffs are off. There's a pause. There are exemptions. There are 232s. It's very confusing, and investors dislike uncertainty. We all know that. Businesses dislike uncertainty, and you have an awful lot of uncertainty right now. Moreover, there are a lot of people that don't like the tariff policy in the first place. You know, the policy is based on two premises, which you can argue are not correct. One is that if the United States runs a trade deficit with any individual country, that country, by definition, is ripping us off. Well, yes, there are some examples of that, no doubt about it. Certainly in the case of China, there have been some unattractive practices and damaging practices. But think of it more simply. If this country doesn't produce much coffee or any coffee, countries like Colombia produce a lot of coffee. If the only thing that was traded between the United States and Colombia was coffee, we would run a trade deficit with Colombia, not because they're ripping us off, because we don't produce coffee and they do. Or, the premise that imports are bad. No, imports are not bad. Imports are good. Imports allow U.S. manufacturers, for example, to assemble final products. About 50% of our imports in this country are components for final assembly. Therefore, if you don't import, you don't produce those products. That's less production, less growth, and you don't export them. And exports mean high-wage jobs. So the premise that imports are bad also is incorrect. So you have a lot of uncertainty. Then you have a lot of people, especially in the business community, that don't like the policy at all in the first place.
Let me talk to you about the business community and that uncertainty, because obviously you advise a lot of corporate leaders. You spend plenty of time in boardrooms. Well, I'm not sure as much anymore because there may not be that many deals going on.
There's still board meetings.
Yes, so there are still board meetings. So what are you hearing, and what are your expectations when it comes to trying to make decisions in an environment like this?
Well, last week, David, I made a point of calling a lot of CEOs because in a time of financial market turbulence like we've seen, extreme turbulence, it's a good idea to talk to your clients and discuss what you think it may mean, what their reaction to it is. And I heard two things across the board to a person that I spoke to. One, they don't like the tariff war. Not a single person expressed support for it. And there's no partisanship here. I'm not calling Democratic CEOs, or anything like that.
Right.
Two, they either are already seeing weakness in their business, or they're sure they're going to see some. And that's consistent with growth forecasts being marked down. I mean, at Evercore ISI, we were over 2% at the beginning of the year. Now we're 1% for the full year, and everybody else is doing the same thing in terms of growth expectations. So they're not feeling great because they don't like the policy, and they think their businesses are being weakened by all the tumult around the policy, because the policy, this erratic on again, off again, up and down, is scaring consumers, and we'll see if that manifests itself. In other words, whether the consumer confidence decline manifests itself eventually into lower consumer spending. I think it will. and it's scaring. It's causing businesses to hesitate.
Yep.
When there's all this uncertainty, what does business do? It says, let's wait until the dust settles before we make big decisions.
Yeah.
And so that's what's going on.
I'm hearing the same from me and trying to do my job as well and talk to the
now,
CEOs.
The
so how long does it last, and does it lead us to a recession?
Well, everybody sees the same people commenting on recession risk, Jamie Dimon and Larry Fink and everybody else. I personally think it's about 50-50 if you think about the next, say, 18 months. But that, in turn, depends a little bit on where the policy goes and how markets react and so forth. At the same time that businesses, however, are saying, let's wait until the dust settles, in terms of our business, backlogs are high, levels of activity are high, but pulling the trigger is on the shelf.
Yeah, I would imagine that would be the case. I mean, certainly it's hard to do a deal in a market like this where prices are dislocated, not to mention, to your point, the lack of confidence and certainty.
Now, if markets move into a period of calm, I don't know if they will or they won't, but if they do, and a lot of this uncertainty diminishes because the policy becomes clearer, then I think you'll see an increase in M&A volume, almost a certainty. But whether those circumstances ensue, I don't know.
Roger, thanks. Hope you'll come back soon
Always a
and talk
pleasure.
about it. Roger Altman.